Hey, are you looking forward to learning how to trade futures or learning how to trade with leverage? Stick around in this video and watch till the end to find all the answers to your questions. Let's go.
Those who know are those who win.
So a lot of new traders think that you can only make profits if the prices of assets are going up. That's not true. You can actually make money even if the price of the asset goes down. I'm going to introduce you to futures trading. In futures trading, there are actually two positions. There's a long position and then there's a short position. You enter a long position if you want to make profits off of the price of the asset going up. And then you enter a short position if you expect the price of the asset to go down and make profit off of it. Okay, so I'm just going to go straight into it and then show you how you can do this on OKX. And then you can actually do this on any other exchange you want if they allow users to trade futures. Okay, so in this case, I'm going to enter demo trading, which I strongly recommend you use to get familiar with whatever is going to go on here. Do it several times until you've gotten a full grasp of whatever is going on in there before you trade with your actual money. Also, unlike spot trading, in futures trading, you do not hold the underlying assets. So for instance, if you want to enter a futures trade with Bitcoin, you are only trying to make money off of the movement in price of Bitcoin. However, you're not really going to hold the asset Bitcoin. So you have to be very careful on that. Which means if you lose the money, you lose everything and then there's no compensation for you. At least for spot trading, you hold the asset and then you hope that the price is going to increase in future and then you're going to get your money back. With futures trading, you lose your money, it's gone forever. There is nothing for you. So to start, you're going to go to trade, you're going to go to futures, and I'm going to choose Ethereum USDT perpetual. So you can see the perpetual swaps here. So the perpetual swap means there is actually no expiration on your position. So you can hold your position for as long as your margin is not down to zero. So in this case, I'm going to use Ethereum USDT perpetual. If you're on a computer, this is how things are going to look like. If you're on a phone, that is also going to be easy. You're going to see this part of it, and then you're going to see the right part of that on your phone, okay? So I'm going to go over the basic things you need to know to long or short an asset, okay? So when you come over to the right hand side of your computer, if you're on a phone, you should see this when you scroll down. So the first thing you're going to notice is this isolator here, okay? And that is the margin mode. Now, margin is the amount of money you are willing to put into this position. So for example, if you want to put $100 into this position, that is your margin. If you want to put $200 into this position, your margin is going to be $200, okay? So let's say, for instance, I have a total of $600 in my account and I use an isolated margin mode. If I enter the trade with $200, this isolated margin mode is going to ensure that my margin is capped at $200, which means that I can only lose a maximum of $200. If I use a cross margin mode, my margin is going to be my entire account money, which means my entire $600 is in the play here. If the market goes against me heavily, I can lose all my money. So it is always good to use the isolated margin mode. If you want to use a cross margin mode, you will have to set your stop loss very wisely, which I'm going to talk about later. So I'm going to keep this to isolated, and that is what I'm going to suggest that everyone uses if you're not experienced. And the next thing you see here is this number here, 3.00x. That is your leverage. That's what we call the leverage. And with the leverage, basically, for example, if I have only 100 US dollars, I can multiply that by 3 and then trade with that, which means that I'm going to have 300 US dollars for that trade. However, that means that I am borrowing additional $200 from the broker, which is OKX in this situation, to enter that trade, okay? The reason behind this is the more money you put into a position, the higher your returns, okay? So you can go at 20x, you can go at 30x, but that is really risky. The higher your leverage, the higher your risk. So it is always better to keep your leverage around 2 to 3x, especially if you're new. If you're entirely new and then you don't want any problem, you can just use 1x leverage. And in this case, you're just using your money. You are not borrowing anything from the broker, okay? So in this case, I'm going to use maybe 3x or whatever. I'm going to confirm that. And you already know what limit order is. That is when you want, that is if you want to enter the trade at a specific price, you can go market order. And this is the amount you want to enter the position with. You know this already. So the next thing you need to know is the TPSL, okay? That is the take profit stop loss, okay? I'm gonna click on that and then always go to advanced, okay? And when you go to advanced, your take profit is where you want to take profit if the price hits. Okay, so in this case, Ethereum is around $3,148. I can put my take profit at 3,200 if I'm going long, which means that if I'm going long, I'm actually expecting the price to go up, which means that if the price goes up, I'm going to be in profit. And so my take profit, I can put it around 3,300. And then my profit is going to be around 1.51 USDT. And I'm going to set my stop loss at around 3,100. And that means that if the market is going against me and then the price hits 3,100, I want to go out of the position and I'm going to lose a maximum of 0.48 USDT. Okay, so you can confirm that. On the other hand, you can go short. And then in the short, what is happening is that your take profit is going to be lower than the current market price, because in short positions, you are expecting the price of the assets to go down to make profit. Okay, I'm going to use an example of 3,000 US dollars as my take profit. And if I do that, I am going to make a profit of 1.47 USDT. And then I'm going to put my stop loss at around 3,200 with the price, which means that I'm going to lose a maximum of 0.53 USDT if the price goes against me and then hits 3,000 US dollars. Okay, if you don't set a stop loss, you can get liquidated, which means you can lose all your money. As long as the price goes against you, your money is also decreasing, and once it decreases to zero, you are liquidated, and then you're not going to have any more money to trade with. Okay, so that makes it more and more imperative to always set your stop loss. Okay, so then you're going to confirm that, and then if it's long you want to go, you're going to buy a long. If it is short you want to go, you're going to sell short. Okay, now all these things can be done on your phone and you can see it here. Now for illustration purposes, I'm going to go to my demo trading and I'm going to show you how that is done. And I'm going to always advise you to demo trade until you are familiar with whatever is going on here, and then you think you are ready to trade with your actual money. Okay, so in this case, now this is what I have in my demo account. I have a maximum of 2,384 USDT. We are privileged to have the leverages for the long and the short, which you're not going to see on the other side, so don't be confused by that. You don't also have to worry about open and close. So as usual, I'm going for the isolated margin mode, and I'm going to do a long trade. I'm going to keep my leverage on the long at 3x. Actually, my available funds is 2,384. However, since I am using a leverage of 3x on my long, I have a maximum long of 7,008 US dollars, which is 3 times my available amount. If I use 10x, look at what happens. I'm going to have a maximum long of 23,259, right? Which is 10 times this amount, 10 times my available funds, right? Okay, so it is always advisable to keep your leverage as low as possible. I'm just gonna I'm gonna use 6,000 for my long. I'm gonna hit my take profit stop loss. I'm gonna go advanced. And since I'm long in, which happens to be a price above the current market price, okay? So now if I get this trade right, I'm going to make a profit of 103.72 US dollars, okay? And then I'm going to set my stop loss, which is very, very crucial, at around 3,100. If the market goes against me, I'm only going to lose a maximum of 87.61 US dollars. And that is even only going to happen if the price hits 3,100 US dollars, okay? So I'm gonna confirm that, and then I'm gonna go long. Okay, I'm gonna confirm that. So currently I can see this on this chart here that I am losing almost $2, right? But to have a clear view of what's going on, you're gonna scroll all the way down here, and then you're gonna tap on open positions. and then you should see your open position over here. Okay, so the first column is size, which tells me the amount of money I currently have for this position. Okay, so currently I have 6,000 US dollars in this trade, and if I hadn't set a stop loss, this could go down to zero, and once that goes down to zero, I am going to lose my money. I'm going to lose everything. Okay, so yeah, the size is just telling you the amount of money I currently have in this trade. So as my profit increases, my size increases. If my profit goes to the negative, which means if I run at a loss, my size is going to start decreasing. Okay, and this column here is the current market price. Okay, so the current market price is 3,147, and the entry price happens to be the price at which I entered the market. Okay, so if you are longing, you are always looking for a mark price greater than your entry price to make profit. So currently my mark price is greater than my entry price, which means I am in profit. However, I need to understand what break-even price is. So now let me explain what break-even price is. The break-even price is the price above which you're going to make actual profit in your account. Okay, this is because anytime you enter a trade, there are fees you're going to pay. So when I hover this cursor over this number, I should see my trading fee, which is $2.99. Okay, so if I'm in profit, now that I am in profit of 4.5 USDT over here, so this is my profit, right? Now this is my profit. Now that I'm in profit of around $3 or something, my trading fee is $3. I'm going to deduct my trading fee from my floating P&L, and that is going to be my actual profit. In this case, my trading fee is $3, and I'm currently at a profit of $4, which means really I'm in profit, and my profit is going to be 4.78 or 9 or 5 point whatever minus 3, which is $2. Right? That makes sense, right? Yeah. So your floating P&L is just the profit you've made so far, and then your break-even price is the price above which you are actually going to make profits in your account. Okay, so for instance, my floating P&L is around $1, which seems to me that I'm in profit. However, this profit is not enough to pay for the trading fee. Okay, which means that if I close my position right now, even though I see a profit over here, I'm at a loss. Okay, this column here is your estimated liquidation price, and that tells you the price at which your margin is going to go to zero, which means you're going to lose your money, right? One thing about estimated liquidation price is if you set a stop loss, you don't need to care about your estimated liquidation price because that doesn't matter anyway. Okay, so for example, if I set my stop loss at around 3,100 US dollars, it means once the price touches 3,100 US dollars, I am out of the position, which means I'm not going to lose all my money. I'm only going to lose a portion of it. Okay, so it is very imperative for you to set your stop loss. And this margin here is the actual amount coming from your account that you put into this trade. Okay, so now my floating P&L is around $17. And I am actually in profit because if I take out my trading fee, I'm still going to be in profit. So yeah, I'm in profit right now. Okay. If I think this profit is enough for me, I can actually close the trade. I can close all, or I can close a percentage of my trade. I can close either 51%. If I close 51%, it means I'm going to lock in $9 or $7 currently. If I close all, I'm going to lock in only $14. And then, they're going to take their fee and I'm just going to make my actual profit, right? So you can close all if you think your profit is enough for you. So I'm not greedy. I think $22, $23 is okay for me. I'm just going to close everything. So now you can see that my available USDT has increased, right? Yeah. So now this is basically how you trade futures on exchanges, okay? Now I'm going to show you an example of when I want to short this asset, okay? So my short, if I want to short, it's going to be the same thing. My amount, I'm going to use everything. My maximum long is around $7,028. So I'm going to use all of them. So let me max it out. I'm going to hit my take profit, stop loss, and I'm going to hit advanced. Now, since I'm shorting, I'm going to go short. and then my target price or my take profit has to be lower than the current market price or my limit order. Okay, so remember, if you're using a limit order, and let's say you use a limit order of 3,100, that is going to be your market price, and so your take profit has to be less than 3,100 if you are shorting. Okay, yes, so in this case I'm using a market order, so my take profit should be around, I want to take profit around 3,000 US dollars, which means that if the price of Ethereum comes down to 3,000 US dollars, I'm going to make a profit of 356 US dollars. Okay, and I'm going to set my stop loss at around 3,220, which means that if the market goes in the opposite direction, I want to opt out of this position once the price hits $3,220. Okay, and that is going to put my maximum loss at around 139 USDT. So I'm going to confirm that, and then I am ready to go short. So I hit short and I'm going to confirm. And when I scroll the way down, I can see my open position, and my floating PNL is around, I'm currently at a loss. Okay, so I am losing $3 ish right now. And even if you lose, right, if you're losing, you will still have to deduct your trading fee. So anytime you lose or win, you're not only losing what you have here, you're losing what you have here plus your trading fee. So you have to be very careful when it comes to futures trading. So yeah, this is basically how you trade futures on exchanges. Okay. Whoa, wait. Are you still trying to trade even though you are new? You have to know the market structure. You have to know how to read the market before you start trading with your actual money. So stick around and I'm going to show you the basics in the upcoming videos. Peace.